the other thing, keep some of this longer than you think. So if you do take some profits, just say, hey, okay, I took profits, I'm covered. Even if this thing goes to zero, I won't lose money. And then once that happens, you should probably keep the rest of the position or pieces of the position longer than you think because the market takes time. If you're in a good environment, of course, we're not talking about bear markets or, really terrible times out there. If you're in something in a decent environment with a good stock, they take time. It's not like we're trading some of these crazy speculative stocks that just go up in a matter of days. No, we're thinking long-term asset appreciation. And what you're trying to do is capture that long-term trading with these things, a year or 2 years, that you can do it with more upside and less capital at risk. So just remember to keep some longer than you think because even in the downturns, if the market comes back, these things start to appreciate pretty quickly. And of course, rule number five, pick a good company. Oh, that's what this all comes down. Yeah, you don't want to be picking necessarily these leaps with some of these very speculative electric vertical takeoff and landing type stocks. Sure, maybe they will work. We can see some big stuff with them, but for the principle of what we're trying to do here, you're trying to pick something that you can kind of rely on for the next year or two that can go up. Lower left, upper right, nice ascending stock, robust, and something that you think will continue to be here. You don't want to do something that is too speculative and actually they might go belly up in the next few months and yeah, then you lost your trade because the company is not there anymore. And just the erratic movement of them too. All right. And then these can actually be available on ETFs. This is another interesting thing. So some of you out there probably know I made 2,000% gain. So that was 2,000% gain on SOXL. So SOXL, that's a leverage ETF of the semiconductors. I turned $38,000, so 38,000 into I think it was $640,000 in 30 days. Now, yes, that was a 30-day option, but what I want to tell you is that SOXL as a leveraged ETF does have options and they have longer dated options. So you don't have to just pick a single stock. You can pick ETFs to do this. You can even do this on the S&P if you wanted to. You can do this on something like ARKK if you want to. You can do this on all sorts of stuff, maybe even some of the crypto or crypto companies or things related to cryptos, miners. Just go look at the particular stock and see what's out there for this particular stuff.